Let us know what your tips are, Rachika. Go ahead.
Hi, everyone. So as Lynn mentioned, I'm a CPA accountant for last 15 years. I'm in business, providing services for personal income taxes, corporate taxes, and it's fun for me. At least it's fun. Not for everybody. Accounting is fun. The topic that Lynn would like me to present today was basically tips for small businesses, tax tips. Am I audible? Is there sound okay?
It sounds okay, but we can't see you.
Oh, unfortunately, I'm driving.
Oh, okay. All right. So never
I'm
mind.
so sorry for that. Will
It's
that be okay?
That's fine. Go ahead.
Okay. Yeah. So I actually did have plans. So unfortunately, I was driving and I was it's my time for a walk in 10, 15 minutes. I was just finishing my errands.
Mhm.
Um, okay. So I can start with maybe explaining the one tip is, I don't know, women entrepreneurs. So when it comes to uh, self-employed, like I can start with the tip for self-employed, that we have to keep in mind that you are a same legal entity for tax purposes, right? So when you do your business as a self-employed, you file your income taxes for your business with your personal income taxes. You don't file it separately as when you are incorporated. The incorporation is when you have a separate legal entity for tax. So that is a big difference that women sometimes don't know. They're like, I have a business, I have a company, but it does not work just by a company, because you could be self-employed and have a full-fledged, even a restaurant. You can have 20 employees, you can have $1 million in earnings, so all that is possible. But the fact that if you are self-employed, you file a T2125 with your tax return for federal, and it's not a separate tax return. So that's a distinction I would like to bring up that a lot of women are confused about. They don't know. Secondly, what I would like to bring up is going in the lines of bookkeeping, that you do not need to have a very fancy way of keeping your track of your revenues and expenses when you're self-employed, because there is no separate identity for business as compared to you. So if you have a bank account, you can keep the bank account same as your business account if you want, your personal account. I do still suggest, if you can split it, it is better to keep track of all your expenses and business revenues coming in and out from one account. And you don't need a balance sheet in the sense, when you have a corporate tax return to be filed, we have to keep a set of books where you have a balance sheet which tells on point A, for example, December 31st, 2023, how much did my money was in the bank, how much was I supposed to receive from people, and how much I was supposed to pay to people, and liabilities. If I have a loan, how much do I owe in debt? That is not required to be filed with your personal income taxes when you're doing a self-employed income tax return. Whereas when you do a corporate tax return, then you need a proper set of books. I always suggest clients to either use a proper accounting software, because you become at a level that, it's always better. But obviously, if you become self-employed earning $1 million, you want to, think about getting into accounting software as well. But if you're starting off, I suggest having a simple Excel file which keeps track of your revenue and expenses, split it with categories, and it is all available on the government website what type of expenses are deductible. And always keep in mind if you have sales taxes. So if you do want to sign up for sales taxes, you must keep a track and splitting your sales taxes on that Excel file, because in the end, what you will be taxed on, or what is tax deductible, is anything which is without taxes, right? Linda, if you don't mind, can I ask questions if people have any questions up until now? Because I can keep talking. It's my passion, so it's
Sure.
different.
Does anybody have any questions? Usually I like to wait until the end, but if anyone has any questions, go ahead.
No.
Awesome.
Good.
Okay. I don't know if you would like to discuss between employee and self-employed.
You can. It's the floor is yours. Whatever it is that you feel that you could share.
Okay, sure. So another topic is difference between employee and self-employed is that when you get a T4, you are an employee, you get a self-employed, you get a T4A. On the federal side, on the Quebec side, they both have Relevé 1, so there's no distinction per se. When you're self-employed, you do have to file a T2125, as I mentioned before. On the federal side, and Quebec is just a T4. What I would suggest is that you when you're self-employed, as mentioned before, keep track of your expenses. It's very important, as well as your revenues. Keep it a good track of them, and keeping copies of your receipts is also very important, because when the government asks, you cannot show them your credit card statement. They actually like to see a copy of your receipt. So nowadays there are lots of apps that you can use to scan them and keep them on a hard drive or whatever you are convenient with, or you want to make a photocopy and keep it. Because trust me, I've seen clients, they said, oh, I have kept them. When they take it out, all the ink is gone and it's white paper. So I think technology has changed, so we can still keep keep them in the original form. And just keep in mind, your credit card statement is not your receipt. So that can be difficult for you to claim those expenses when you're asked to show them. The second point is to file your taxes on time. So be aware of your tax filing deadlines. You can always reach your accountant if you need to, if you are not sure how it works. And then keep in mind that Quebec does give you very unnecessarily heavy penalties, even if you're late by 1 day. The federal is more lenient. So that is very important to file your taxes on time. Next would be not paying your installments. I always suggest clients to make installments if possible, because if you have a tax amount owing for $2,000 and more, the government sends you a reminder that you can pay in advance. And if you have a refund, for example, the next year, you get your installments back, right? Or if you have to pay a little bump up extra, then you're only paying out of pocket a smaller amount, rather than paying a big lump sum in one shot. But then again, it depends on how you manage your finances. You may be good with your finances, and you can actually maintain your cash flow and then make a big lump sum payment at the end of the year. And some clients prefer making installments. My suggestion is always paying installments if possible. When you have business, you see your business growing. So that's my suggestion. Another suggestion is you can also use a line of credit instead of using your carte de credit or your credit card, because credit cards sometimes have really high interest that you have to pay, and it's better to have a line of credit. That's another thing I could say you could save your money on. Yeah, and as I said, paying installments, and also keep in mind different types of taxes that are there. So as an incorporation or as an individual, depends on what line of business you are in and what's your scale. I just want to bring up this very important topic that a lot of people do not know is there are 3 different types of taxes. One is your personal income tax, or if you are an incorporation, that'll be your corporate tax. Sales tax is the same for self-employed or for incorporated company. And then there's deduction at source if you have employees, and even if you do not have employees as a self-employed, then you have to pay QPIP amounts, right, as a portion of employers. So please keep in mind that there are different types of taxes that you have to owe. And if you open a company, keep in mind when you're opening, do you need to have these different tax accounts open? Sometimes people just go check, I need it all. but they actually don't need it all, and then there's a process of actually closing it. So that's important. And I would say do your bookkeeping on a monthly basis if possible, if not quarterly. Annually for me is a big no, if possible, because you have to go back in time and think, what did I do last year in 2023, January? So either quarterly, fix a date on your calendar, make sure you wrap it up. And then it also gives you an idea what your last quarter was or last month was and helps you plan your future. Keeps track of your cash flow. And I would always suggest to talk to your accountant, whoever it may be that you trust, before making any decisions that may have a financial impact, which you may not think sometimes there is, but there is. So have a relationship with an accountant is very important. That's it for me.
That's it. I have a couple of questions actually that
Sure.
come up often when I meet with clients. One question that comes up is I know that there's a lot of women in the group who work full time and also have a business on the side. They're self-employed. How does that work when it comes to taxes?
So basically, your taxes, as I said, if you're self-employed, you are going to be taxed on the same tax bracket as any, sorry, let me repeat my words. So if you're self-employed, you're paying taxes in a lump sum in the same group as your salaried income, right? So if you earn 100,000 as salaried income, and if your net income after revenue minus expenses is also 100,000, so you'll be paying taxes on $200,000. So you will fall in that tax bracket, and then you'll be paying taxes. Is that what your question was?
Yeah, exactly.
Okay.
I know the answer to that question, but I wanted
Yeah.
to hear it from an accountant because it always comes up and
Yeah.
yeah.
Makes sense. Does anybody has a question for the mathematical calculation? So when you're self-employed, I could make $1 million and then I could have $1 million and change in expenses. So I will not be paying taxes on the $1 million, right? I pay taxes on the net amount. That's my bottom line, revenue minus expenses. So when I said your salary is 100,000, obviously that's, again, I'm still talking about the gross amount. After taxes, you paid whatever you pay in the taxes. Same thing for self-employed. You earn something, then you have expenses, and then you pay tax on the net amount, what's left over after whatever you have paid out.
Exactly.
Or claimed, or actually claimed, I would rather say. And always remember, what is a deductible? Boy, this is very important. I think this is not in relation to your question, but a question I get from client is, can I deduct this as an expense? So answer to that question is, if you have incurred expense to earn money, you can deduct it. Okay. So it depends what business line of business you are in, that you can deduct an expense.
Exactly. Another question that comes up, can I deduct my dry cleaning or the clothes that I purchased?
Depends. I don't have a black and white answer.
Yeah, but it goes back to exactly what you said. Is this expense used to earn income?
Yes.
That's what it boils down to.
Yep, exactly. And that applies to, again, I'm keep bringing up self-employed and corporate because I have seen a lot of women self-employed incorporating with no knowledge of the transition, but there are some things that apply to both and some things that do not apply to both. So if this topic of, is this expense deductible, it applies to both. And if I can add one more point, is that when you come to taxes, as I have seen corporations, women, or in general, having two sets of book. Tax deductible means on a corporate tax return or on your personal income tax return, you can deduct it. So you have to remember that, again, did I incur this expense because in my line of business, it's an actual expense to earn some income? Go ahead. I have clients who are influencers and they do, buy makeup and, they buy a certain way of look. yes, they could have jewelry or makeup as an expense, but as an accountant, I can't do that, unfortunately. So it depends the line of business you are in.
Exactly.
Yeah.
And next question that I have is the age-old question: when is it time to incorporate my business? So I just spent all afternoon with a client going over this with her accountant and her legal team. Um, what's your advice on someone who's a sole proprietor thinking of incorporating?
I think personally, myself as a professional, I've seen this is a very gray area. There's no one fit all for sure. Depends on again on your line of business. Depends again how much you're earning in your salary. If you this is a side gig, I have seen clients making $500,000, $1 million on a side gig, and they're still happy with making 200,000, 50,000, 100,000 in their regular salary, right? So it depends. The criteria it varies. It could also be a case where you want to, the liability, making sure that there's no liability on your personal, your personal life, or you want to keep it separate. It depends on your business, what it is. I'm sure if you want to open an insurance company, you want to become a broker, it's always, maybe easier to get into a company than maintaining a self-employed because it might be for your liability purposes, it's easier, same for an accountant. So it depends. I would not suggest giving an answer as black and white if you're asking me, because it depends on many factors.
Oh yeah, definitely. But with something that I see, and I'm sure you've seen this as
Yeah,
well, is that when you look online or if you talk to certain people, there's that pressure to incorporate.
yeah,
There's you should incorporate the minute you make something I see all the time. When you reach $100,000, that's when you
yeah.
should incorporate, and it's not as simple as that.
Yeah, and as I said, like there might be more chance of being audited when you're a corporation than personal. I've seen that too. And people think, okay, can I just get away with Excel? Sure, if you want to go ahead. When they ask you for a ledger, you will not have one on Excel. And you have to also think of future planning, that if you want to grow your business at a certain level, it's easier to maintain proper set of books as well. So I personally don't tell people yes or no based on just I can or cannot or should or when incorporate, because it varies a lot.
Yeah, exactly. And you also have to have cash flow in your business, right? So it doesn't matter, like you were mentioning, you have clients who make 1 million a year, but if they use 1.2 million, there's no cash flow in the business in order to take advantage of um, certain tax efficiencies that come with being a corporation.
Um, I'm sorry, I didn't get your point. Could you mind repeating
Oh,
it?
oh, I was just saying that if you look online, there's a lot of advice that once you reach $100,000, that's when you should incorporate. And you
Yeah,
had also brought up that some of your clients that you work with, let's say, make $1 million a year, but
yeah,
just you make $1 million, 100,000 or 1 million, it doesn't matter. It's beyond how much your business generates. It's also about how much retained earnings you have, so cash flow in your business,
right.
because
Yes,
otherwise you can't take advantage of some of
the
the fiscal
tax.
strategies. Exactly.
Yeah, exactly. Yeah.
There is a question in the chat. So again, it goes back to kind of what we were saying. What is the minimum amount of revenue before you should incorporate?
Um, Same answer. It depends. You have to discuss your future planning, what you want to do. Some people make money. Some people can get contracts for 6 months, but not the other 6 months. So I cannot decide for a client. In the end, I do give client suggestions based on their scenarios, and then it's something they have to keep in mind, decide, not my decision.
Yeah, exactly. And it's not just
Hmm.
about how much revenue you
Yep,
bring in. It's a lot
yep,
more
yeah.
factors.
It could
Also,
be seasonal, as I said, right?
yeah, there's also future planning as well.
Yep,
Imagine you take everything that's personal and put it into your corporation, but
yeah,
it's not a business that you're really taking seriously or want to keep for long term. Maybe you
yeah,
don't make that move because then you'll have to dissolve your corporation and
yeah,
bring it back.
yeah. Am I still audible?